Hi everyone, I'm Paul and welcome to my market update for the 28th of September 2022. Today's video is going to be really short and to the point because markets are on a knife edge and look poised for another leg down. I've been talking a lot about the macro outlook in some of my previous market updates, and it looks like we're finally really close to a realignment in risk assets. But before we dive into our charts, please like this video, and if you haven't already, subscribe to my channel and turn on notifications so that you never miss an update. Now let's jump into today's video. So we're going to start today's video with the ES or the S&P, and the reason why I'm concerned at the moment is because you can see this daily candle here. It obviously still hasn't finished closing yet. We've still got about 8 hours in the session left, but you can see it's already breached this low from June back here, and I think that's sending a real clear message and a bit of a broadside across all risk assets, because if we're seeking liquidity through here, I think we could get a bit of a cascade event, and if we just zoom out, there's really not much below there. And the trend since the end of last year has been pretty clearly bearish, but you can see that we've basically been painting, lower highs and lower lows over this period, and pretty much the next sort of resistance, if you want to call it that, is considerably lower. Now, if we zoom out to our monthly chart, you can see we have a monthly order block here. Now, this is obviously a big range, but this is where I think the market's going to draw into, and we'll start to see potentially a little bit of consolidation. Now, if we go back into our daily chart again, the levels that I'm really looking at is the pre-COVID crash limit just here. And if we draw that out, you can see that is pretty much right dead center in the middle of that monthly order block. And if we zoom in a little bit closer, you can see we have a bullish fair value gap just here. Now, I've mentioned this level in my other videos before, and that is pretty much dissected by that previous high just before the COVID crash. Now, if you think about it, a return to these levels makes a lot of sense. Obviously, the Fed is increasing interest rates. They're trying to reduce the money supply, which is what they were doing throughout this whole period during, the recovery from COVID. So it makes sense that the Fed's going to be reducing money supply. So we know that they're doing that both through QT and through increasing interest rates. And so you would think if we need to remove all of that stimulus from that period, then we need to get back to those sort of pre-stimulus levels, which is around here. So that to me just all logically goes together, and the breaking of this sell side liquidity relative equal lows here suggests to me that we're about to make that move, and we're about to see a realignment in risk assets, which obviously has a direct impact on the crypto markets because of their high correlation with the S&P and the other equity indices. Next, we're going to move to the DXY or the US dollar currency index. Now, we've looked at the ES and we can see that we're clearly about to break a key level, which is those lows from June of this year. Coupled with what's happening in the dollar, there's a real cause for concern. And we've talked about the dollar in other market updates, and you can just see the power of this trend. So we're on the monthly chart here. We've pretty much broken through all the levels that I anticipated in my earlier market updates, and the move is just so strong that we really just don't seem to have any stopping the dollar at the moment. And I wouldn't be surprised if we take out the buy side liquidity sitting above these highs here. There just is nothing stopping this move. We've blasted through this level. So this was the swing low that I was initially targeting. There's a fair value gap here. We've just sort of poked above that on the monthly, and we've retreated back a little bit now, but this trend is just so strong, and you can see how big this particular candle has been here. There just doesn't really seem to be any stopping the dollar. So this just creates a lot of confluence in terms of what's happening in risk assets. So it's obviously an inverse relationship. And as long as the dollar stays strong like this, risk assets are going to be under significant pressure. And I think just given where they are, it suggests we're about to see, a bigger move to the downside, potentially a big leg down. So we'll move across to crypto now, and we'll start by looking at Bitcoin. Now, the first thing that's a concern is that we've breached the lows from June on the S&P, but if you look at Bitcoin, you can see that we're not really close to those lows yet. And so the concern I have is that we're going to see a catch up in crypto, and then we could be a little bit behind. And obviously being, a higher beta asset, if we do get a move on the S&P, I think we'll see an outsized move on Bitcoin and obviously Ethereum as well, which we'll cover in a moment. So you can see we've been trapped in this trading range, for quite a long time. This purple line is the all-time high from the previous cycle, and you can see we've just sort of ebbed and flowed around that level for quite some time. And if we were to draw a range that we've been trading in, it would look something like this. And the thing that's a real concern of that is that we've been, testing the bottom of that range a number of times. So, we've tested it here initially, again here. Now, being pretty generous because these are obviously more than one touch often in some of these moves. We've deviated here, we've deviated again, and here we are again. You just don't really get that many touches before support like that gives way. And so that's why I'm pretty concerned about Bitcoin at the moment, and Ethereum. I think we're about to see a bigger move or an outsized move on the crypto assets, just because they're going to have to catch up for where the S&P and those other stock indices are. And if we zoom out a little bit, and if we go down onto our monthly chart, I think this gives us a bit of an indication of where we're about to go. So you can see the chart for Bitcoin looks pretty ugly. You can see we had a little bit of relief here. We've taken out the liquidity at the high here. We've come back down, and this candle now we're just starting to attack this sell side liquidity on this monthly candle, which again coincides with that June low. So if we look a bit further down, we're through that all-time high that I talked about before, and really the first place I think we'll see some consolidation is down in this fair value gap, this bullish fair value gap we have down here, which is around this 12,000, to 14,000, 13,500 level. So that's a pretty big move from where we are, but just given where we are with the S&P, if we do lose that June low, I think that this is where we're going to be going in Bitcoin. And so we really need to be keeping an eye on that key level in the S&P, because if that gives way, I think all other risk assets, as I said before, are going to follow it downwards. So if we shift over to Ethereum now, I think it's actually in a worse position than Bitcoin, because we had that run, with that narrative attached to the merge. You can see we took out the buy side liquidity up here after the merge. Even though it was completely successful, the markets pretty much sold the news of that event, and it's been down ever since. Now, because Ethereum had that strong run against Bitcoin because of the merge, it's just simply got further to fall. You can see we have the June lows are all the way down here, where Bitcoin's clearly trading much closer to those lows already. So I'd expect we're going to see an outsized move in Ethereum if we lose that key level in the S&P. And the sell side liquidity targets where we think liquidity would draw to in Ethereum is quite clear. We've consolidated around this level a little bit here. We've got probably, another fair value gap here, which we've tagged once and twice. We're going to attack this sell side liquidity here. Once we break through that level, there's obviously a lot of inefficiency here which could be filled in. We have these relative equal lows here, and then we have that low from June down here. So there's a long way to go if Ethereum is going to catch back up to Bitcoin. So I wouldn't be surprised if we lose that key level, that, as I said before, we see an outsized move in Ethereum as it realigns itself with Bitcoin. So there you go, there's my market update for the 28th of September 2022. It was just a short one because I think markets are in a really critical place, and I think it pays to be well armed and understand what the situation is and what we need to be looking for. If we lose that key level in the S&P, I think all risk assets are going to get hit, and it's really just going to be a matter of where we start to find support on the S&P again before we start to see a bit of consolidation in risk assets. So I hope you found that helpful. If you did, it would be great if you could like this video, and if you haven't already, please subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching, and I'll see you in the next video.